if you're ready to raise capital, the first step would be to onboard a transaction advisor. A transaction advisor helps put together all your information, come up with a valuation, and prepare the documentation, the application to CMA. We have a very ambitious goal to increase the number of listed companies from 62 to 100. So we have a target of 40 new listings in the next 5 years. We've seen a lot of inflow of PE money and VC money, which has actually then taken away transactions from the public market. In the previous regulation, you were required to have 1,000 shareholders when you are coming to the main investment market segment. That number has been lowered to 250. For the SME side, you are required to have at least 25 independent shareholders. Now you're only required to have 7.
The NSE is open for business.
We are open for business.
Yeah,
it's not business as usual. We are preaching water and drinking water.
Thank you everyone for joining us on today's episode at the African Podcast, where we trace the money and discuss the capital and deal flows between or across public and private markets. My guest today is Gift Kori. Gift, thank you for joining us today.
Thank you very much.
We could start with an introduction of yourself. Please tell us about yourself.
Thank you, Linda, for having me. It's a real privilege. I think you and I go way back. We started our careers, both of us, at the same organization. And it's good to see you
too.
Flourish in the industry. But I started out as a research analyst with one of the local investment banks, then transitioned into transaction advisory, then found myself doing a short entrepreneurship stint, and then decided to come back into the corporate life. And I joined the NSE in 2023. So it's been 2 years and some change now. And other than that, I am an avid, let me not say camper because some people are going to kill me, but I love the outdoors. And I'm also a dog dad, a role that I've come to love and hate at the same time. So,
Okay, so what do you do at this Nairobi Securities Exchange?
So I'm the advisory manager for SME growth. And basically, my job is to craft value propositions for SMEs and support them through the capital markets journey of fundraising. So we work with SMEs right from the onset, and holding them through the fundraising process, whether it's debt or equity. And we just support them in every way we can in order to make sure that they successfully raise capital through the NSE.
Thank you, Gift. Thank you for taking time today. And so, Gift, today, now that you spend your time at the NSE, today we are going to discuss the opportunities available through the NSE for investors to raise capital or for capacity enhancement for SMEs. And we know that of late, the NSE has somehow been overlooked, or people have lost a bit of confidence in the capability of the NSE to support fundraising efforts. Okay. And so today, let's start our discussion by, looking at how the NSE facilitates, or why is the NSE an attractive avenue for investors looking to raise a return, and for founders also looking to raise capital.
Okay.
Yeah,
I think that's a very interesting question, and it's twofold. So, of course, investors have different motivations, whereas founders who are looking to raise capital also have different motivations. The beauty is that the NSE provides a platform that serves both purposes. For investors particularly, the exchange, or all exchanges across the world, are an intermediary for how wealth is distributed between entrepreneurs and the public. So from an investor perspective, different investors, basically whether foreign, local, retail, institutional, can come to the NSE to access opportunities, investment opportunities that they would not otherwise access anywhere else. So we provide a robust marketplace that facilitates investments and transfer of shareholder wealth between companies and investors.
Okay.
So we have a range of products that investors can invest in. The most common products are usually, of course, equities. And these are what people commonly call stocks. And we offer about 62 listed equities across blue chip companies. One of the largest is Safaricom, which and then we have the banking sector stocks. Then we also have commercial sectors. We are sector agnostic, so we have a good range of sectors and many more sectors that we would like to bring into the fold, including fintech, education, agriculture. I think we would like to see a lot more participation in those sectors. But aside from equities, we also have bonds. Which are secondary. We provide the secondary trading platform for bonds, government securities, but we also facilitate the issuance of corporate bonds, which are fixed income products that are issued by private companies, could be private companies or even listed companies. And investors can participate in these fixed income products. Of course, it depends on the risk appetite of a particular investor, whether you go for equities or you go for bonds. One of the products that is really coming up is the REITs for the real estate real estate investment trust. And we have currently 2 listed REITs in our market, and we are seeing a lot more appetite on that side. And hopefully, in the coming months, we will see a few more issuances of the REIT within the REIT market.
That is quite interesting.
Yeah,
because I remember when Fahari IRA, it was being
done.
The IPO was happening in October of 2015.
Yeah,
it was actually undersubscribed.
Yeah,
but it's good to learn that investors are now keen on getting a return and looking towards the real estate sector without owning actual buildings.
The real estate market in Kenya is very interesting because I think it's a sector that most Kenyans understand. I mean, we hear about ploti maguta every day on the radio, and Kenyans are really obsessed with this thing of owning a title deed. But with that comes its own challenges, especially liquidity. When you want to dispose your piece of land, I mean, we were just talking about this a few minutes ago, and it becomes very hard. So the REITs, or rather, the REITs provide you with a very efficient mechanism for you to still invest in real estate products or without necessarily investing in land and the brick and mortar. So you can, it's a chama that actually invests in real estates. And you get dividends at the end of the year. And the beauty is that REITs in Kenya are actually tax exempt. At the corporate level. So the REIT usually doesn't pay corporate income tax. And actually it's by regulation, it's also required to distribute 80% of the returns. So it's also a very good investment to make if you're also looking at maximizing your return from a tax perspective. But other than that, we also have some other products such as ETFs. We have which are exchange traded funds. And basically, these are usually have an underlying asset such as gold, and it's also like, I would call it just another chama that invests in a particular asset. And we have the ABSA ETF Gold that is listed here, which is one of the best performing products, I think, 2 years ago when we had a lot of volatility in the market. That is very interesting right now. And we are trying, I think, we've tried to provide as much diversity as possible in terms of the products that we bring to market, so that investors can get as much exposure as possible to all the products that we have to offer. But let me also jump to the founders side. I think we also, like I said, our job is to facilitate creation of shareholder value. So founders can come to the stock market and issue shares or equity and raise money in order to expand their businesses, to go into different regions, to depending on their strategy. And that is cheap and patient capital, which is necessary for most founders and very hard to get. But by coming to the stock market, then you allow local and foreign players to come in and build that shareholder value with you in a very patient and albeit cheap manner. So I think that's one of the things that investors stand to gain. And I think the listing is usually just I would call it the wedding. After the wedding, that's when there is a lot more that you can actually do. So that's just a ceremony, but you can always come back to the market and through structures like rights issues, you can raise more capital on the equity side by issuing more shares. You can issue corporate bonds. So it's a balancing act, and it's also a very it's a happy dance of different capital structures and things that you can do within the stock market.
So what is the process? Like, take us through the process of today I am an SME. I want to raise capital through the NSE. So where would I start?
Wow. SMEs.
And what products or what platforms are there?
Okay. I think it's a very interesting question, especially now that you've brought in the SME angle, because SMEs are a very interesting. The SME market segment in Kenya is very interesting, and I don't know whether you know. Like I said, when we started as research analysts, and these are some of the reports that we used to write, but 98% of the businesses in Kenya actually are SMEs.
Actually, Africa's economy right now is being driven by
SMEs, but they're also the most unbanked sector, or rather underfunded sector in the economy. Yet they create almost 70% of the jobs in the market, and contribute to almost more than 80% of Africa's GDP on a daily. So for us as an exchange, we realize that we cannot really have significant impact or we cannot really play a catalytic role in the market if we do not cater to SMEs. But SME funding comes with its own challenges as well. In as much as there's a lot of opportunity that's lying with SMEs, getting SMEs funded is very tricky. So as an exchange, of course, a lot of our fundraising is anchored upon regulation, and most SMEs typically do not meet those requirements. And I think at times we've always had this badge where we are viewed as very elitist, where we only cater to
a certain caliber of SMEs.
But what we've done now is, for example, so the journey for an SME, we start within the Ibuka program, which is our incubation stroke acceleration program that supports SMEs to become investor ready. So if Linda, today you came with your business, what we would say is, okay, this is the regulation and these are the regulatory requirements. Then we do a diagnostic. I'll take you through a diagnostic process and say, how do you compare against this regulation? And once we identify the gaps that you need to fill, whether it's corporate governance, whether it's audited accounts, you'd be surprised at how many very big businesses who do not even have audited financials.
That's true.
And that's already an impediment. Or a corporate governance. So there's no board, there are no internal structures. And we work with a team of industry professionals and consultants to help SMEs plug these gaps. And once they are ready to raise capital, then we accelerate them towards the different platforms that we have for raising capital at the exchange. And this could be maybe so either the fixed income side if they're looking for debt, or on the equity side if they're looking for equity capital. The beauty is that, and we might probably touch on this later, but there's the new regulation that is in place really supports SMEs to issue, to raise capital through the exchange. So the barriers to entry have really been lowered, and SMEs can actually IPO right now. They can actually issue just 10% of their equity. They don't necessarily need to come
list everything.
And they can do that in a tiered approach manner, so that they can always raise ongoing capital even at higher valuations as and when they grow.
And how long does this process take?
This process takes, subject to availability of information. If you're ready today for the listing process and you comply with all the checklist requirements, then it could take you 3 to 4 months to complete the capital fundraising process. So
Given
I
that,
see that
a due
yeah.
diligence process sometimes can take
it can
like
take
6 months from pipeline development, like the initial meetup with the fund, to the day they actually the money hits their account. Then I think 3 to 4 months is quite reasonable.
Yes, but remember the caveat is subject to availability.
Because
to how
the
ready.
6 months too is because
that's why I think for us
gaps.
it's important to take them through that process of preparing them, such that if when they are ready to go to market, then it becomes a very seamless process. And many people say that the fundraising process through the exchange is very laborious and tedious, and there's a lot of regulatory hoops that you need to skip. But once you engage with the process, you find that it actually, the regulator is very facilitative. And it's not like the regulation is cast in stone. We really want to support businesses to raise capital. So each business will be evaluated on its own merit without diluting the spirit of the regulation. So I think, so there's legroom. There's a lot of flexibility on the part of the regulator, and for us, the important thing is to make sure that we provide access to the capital, as opposed to locking out companies that could potentially come to market and raise capital.
And so what you're saying is, say an SME or an enterprise is raising capital. If they go through the NSE, then they do not have to engage a secondary advisor or a secondary advisor, because the NSE will bring in industry experts and advisors that would do the same work as an advisor would.
Okay, so not necessarily, because remember in the Ibuka program, that's where we work with the industry consultants, and those could be financial advisors, it could be legal advisors, it could be tax advisors, in order to prepare the company to come to market. By regulation, a company is required to have a licensed transaction advisor by the CMA in order to come to market. So once they are ready to raise capital, then we also provide them with a list of transaction advisors in the market. So in terms, from a process perspective to your question, I would say, if you're ready to raise capital, the first step would be to onboard a transaction advisor. A transaction advisor helps put together all your information, come up with a valuation, and prepare the documentation, the application to CMA. Then they will submit the application to CMA, and the application just basically says, this is who we are as a company, this is our growth strategy, this is our historical performance, this is our valuation, and this is a legal opinion to say that all the information that has been provided here is accurate, and is accurate, and an investor can actually act upon it. CMA, together with NSE, will do a dual review process, and they will look at the application, try and align with the issuer, and then once within 2-3 weeks, you will get either an approval or a letter of objection. And if you get your approval, then you can go ahead. Now you'll have a book building process where now you go to market and actively speak to the public and, tell them this is the issuance that's coming to market, that book building process, which runs maybe for another 1 month. And then you collect the money and you go and implement your strategy.
All right. Okay. Yeah. And so Gift, IPOs, the much discussed drought at the Nairobi Stock Exchange, and looking at African capital markets and other stock exchanges, there has been a slowdown of new listings. And so what is the NSE specifically doing to turn the tide on this drought?
Okay, so let me also start by first saying that the IPO drought is not unique to Kenya, to the NSE. I think it's something that we've observed across the region, especially in frontier markets. We've not seen very many IPOs in the recent past. But that's not to say that the NSE does not have work to do in order to encourage listings in the market. On the back of our new strategy, which was launched this year, we have a very ambitious goal to increase the number of listed companies from 62 to 100. So we have a target of 40 new listings in the next 5 years in this
quite
strategic,
ambitious.
quite ambitious,
Yeah.
but we believe that it's doable. Some of the impediments to coming to market, or which have been some of the reasons why this listing drought is because we've depended on, most of the time, government privatizations for IPOs. And we've not seen a lot of the private sector actually participate actively by bringing companies to market. We've also seen a lot of DFI and PE activity in the recent past, which has also sort of crowded out listings because with availability or
if you can be bought secondary
on a
market by another private equity, you don't need to
transaction. It makes for a very seamless process. And I think we've seen a lot of inflow of PE money and VC money, which has actually then taken away transactions from the public market. But one of the things that we want to do as an exchange is to position ourselves as an alternative to the conventional methods of raising capital. For example, right now, if you want to raise capital, you'd either go to the bank, go to the PE, or the VC. But what we are saying is it possible? And this capital comes with its own restrictions. So, of course, for PEs, it's rapid growth and expansion, scale, and all those things. For us, we want to position ourselves as an avenue for very patient capital that is can allow the entrepreneur or the founder to grow sustainably. And by so we've also we have a new piece of regulation that is really enabling, as I mentioned. And a lot of the barriers to entry have actually been lowered. So in the previous regulation, we used to have 3 market segments. So we used to have the main investment market segment, the alternative investment market segment, and the growth enterprise market segment, which was mainly for SMEs. But now the regulation has actually eliminated the alternative investment market segment, and we currently have just 2 market segments: the main investment market segment and the SME segment. And with those 2 things, like for example, in the previous regulation, you are required to have 1,000 shareholders when you are coming to the main investment market segment. That number has been lowered to 250. For the SME side, you are required to have at least 25 independent shareholders. Now you're only required to have 7.
That's reasonable.
Very reasonable. Also, we had capital requirements. And for example, on the SME side, you would need to have, I think, at least 100 million in share capital. That now has been reduced to about 10 million shillings. So the barriers to entry have really been lowered, even on the main investment market segment. And we want to see a lot more people coming to market. We've also introduced new structures such as SPACs, which could be a very good avenue, sort of structure for mobilizing or catalyzing private equity exits. Those were not there in the previous regulation. But we also want to be a lot more market facing. We don't want to wait for businesses to come to us. We want to engage with the private equity sector. We want to engage with the VCs, because they are the ones who are also sitting with good quality companies. Because let's also not turn a blind eye to the quality of companies as well, because there's also a very big challenge with finding good quality companies that can come and raise money from the exchange. So we are doing, we are increasing our engagements with industry associations. We are increasing our engagements with private equity to build a healthy pipeline of listings over the next few years. And I think we are seated in a very interesting place from a macroeconomic perspective. I think there is a lot of activity in our market. So we are seeing a lot of foreign investors coming in. We're seeing a lot of participation in our local markets. So pension assets are continuing to grow, and we want to tap into those pools of capital in order to facilitate fundraisings for companies.